Good evening. Ira Epstein with your Spider ETF and I guess stock wrap up. And this is for Thursday, the 7th of April, 2022. Interesting day. You know, the event to me of the day at least was seeing the jobless claims fall to a 50-year low, 50-year low. So what that really does is it says to the Fed, you've got what you thought. You have 3.6% unemployment. There is talk that, in fact, Mr. Bullard, who is the hawk on the Fed, thinks it's going to go down to 3% unemployment. You're getting the claims falling. I didn't like and I didn't understand how continuing claims are going up when you get a 50-year drop, but it's probably some adjustment I didn't understand. And that to me was just absolutely fascinating because it says to the Fed, go ahead, do 50 points in the rate hike in May, run the balance sheet down, because as long as you have a strong jobs market, it cushions the blow of us, that being us, word the Fed, going to slow the economy down to pull back inflation. Remember, the Fed has two mandates: employment and inflation. They're not in politics. That's not their job. They're not in all the others. They can do quantitative easing, but we've now entered another phase. I mentioned it yesterday, and I want you to get used to it. We're in quantitative tightening. And the Balance Act is going to be to keep the jobs market strong enough so that the Tightening Act doesn't put you into a recession. I think it's as that simple as that. Listen, everybody espouses about it, and they have all degrees that I don't have. But I think it all boils down to, if the jobs market is strong enough, that cushions the economy. If you can cushion the economy, the Fed can get its job done, get inflation back where it wants. Does that mean stocks go up in that? No. But I do think that you'll have periods where they can go up, and I think that one of those periods is often the month of April, the month we're in right now. With that in mind, I did a special report on the S&P 500 because if you watch the SPY, it's based completely on it. Well, it talks about that. The report goes off our website tomorrow. Typically, I do these reports and I only leave them on for 3 days. 3 business days. I did this one a little longer because I thought it was pretty important. Just take your cursor, move it up, click, and you can view the report. Okay, that's the end of that. Now, Warren Buffett today buying more Hewlett-Packard. He's a value investor. He'll come in when he likes the multiples, likes the market. He'll take advantage of down markets to come in with companies he thinks are going to be around for decades. You heard what I just said. And that their business model is strong and that they're undervalued at whatever PE ratio in his matrices say. Twitter pulling back a little, I'm not surprised. Now the question is, do we fill the gap? So with that in mind, let me know, start writing me tonight, what other markets you want me to replace Twitter with starting next week. I'll probably cover with Twitter through Monday, and then Tuesday I'll reverse out of that, okay? When we take a look, there's a gap in the chart. I've got a circle on it. That's what I think the market is trying to fill the gap into, if it's going to pull back. If not, and it stays like this, and if it were to gap up, you'd have a breakaway and then a runaway gap. So two possibilities. Generally, markets like to fill gaps. You can see how the market came out of this. It had been in an uptrend, and then it took off. The 200-day average is what the market is having trouble with. And then if you put the Bollinger Bands, each day I've been pointing out to you, I said you're over the Bollinger Bands. You only stay out of them 5% of the time. The odds favor you're going to pull back into it. So you had 3 days in a row coming into today, and now you're inside the band. That is the beauty of learning about Bollinger Bands. My enhanced Bollinger Band course, I think, will dramatically change how you look at these bands today and the new level I'm going to take you to on them. It's on our website, and it's iraepstein.com under education. But that's pretty formidable resistance. The 200-day average in the Bollinger Band. Now will it fill the gap? We're going to find out. There's nothing bearish on the chart, or is there? There is. The market had gotten itself up and embedded. Embedding occurs when the slow stochastic numbers get over the 80 level together and stay there for several days. Once done, until the red line closes under 79, the pros are buying breaks. I don't think anybody expected that to occur, But the setup was there, no getting away from it on the embedded reading. Then the event happened, and watch it, the market's going to take off. Take a look. I mean, it's crystal clear you were positioned. If you got out to get out of the Bollinger Band, you got out, on the gap higher, you just made a killing. The market went up for easy more money, and now the market's coming back into the correction. Along the way, this is Wednesday's action. You're still embedded. This is the close tonight. You've lost the embedded reading. You need a sharp move up. The only time you get the embedded reading back is the very next day, normally in the first hour or so of trading when the market's open, and you have to be over that 80 level again like that. Barring that, it often says you're going to make a run back for the 18-day average of closes. Don't know if I'll be right, but that's what my work says. AMC, I'm the happiest guy. I was here sticking my neck out, and some of you wrote me. I appreciated it because I kept saying, this is a sucker play. I can't believe they take this up. There is no business model that I know of in the movie theaters that makes money. Now, if somebody that owns one wants to write me and tell me about it that's got a reasonable sized theater, I'm talking the old 16 screens, the 12 screens around the country, and they're telling me those things are making money, Boutique theaters, a whole different world. You have 2 screens, each one's got 25 people. That can make it, but what are you making in money? Is that worth the effort? I don't know. But that's not what most of these are. I don't see how they stay alive, okay? Maybe they'll get sports betting in them. I don't know. They have to evolve into something. How do I know this? I went through that pain. You're looking at a guy that did it. And I had one of mine with the Simon Group. You know who they are. They were the landlords, and they were absolutely the most wonderful people I'd ever met. Just great. I'd fly to Indianapolis, meet with them. But at the end of the day, I realized we had a losing business model, and out you go. So coming down like that, away you go. Somebody else bought it in the end. I doubt it did well ever after that. In Apple, okay, you're back to the good nature area here. You're back to the 18-day average of closes. You wait and you see what's going to happen with that. Disney, down to the Bollinger Band. Now I'm interested. This is where the pros come out. Said it yesterday, I'm saying it today. I'm not a buyer of breaks like that, but I think it's washed to the downside. So now if COVID comes back in America, maybe somebody knows something, and that's what you got to be careful of. Because did you look to see how many people in the Capitol, Nancy Pelosi, one of them now, have COVID? I'm talking our Secretary of Commerce. I'm talking Mr. Garland. I'm talking Nancy Pelosi. That's just them, what's happening around the country. Does somebody know something? That could be bearish, obviously. Each wave of COVID is not good. Do we have enough vaccines? Are enough people done to mitigate it to a large degree? Yes. Are the deaths going up? Yes. Deaths in Chicago, they said, went up 28%. That's a big number, but the number's 304. We're not dealing in thousands. So it's climbing. This number came out today. It's climbing, and you have to watch these things. Okay. Next is XLF. Again, for my money, if you're bearish, you came out of the market today. XLI, if you're bearish, you came out. This is why I think you can get a pop at any point in this market. X, not getting news that COVID is going crazy in the country again. A lot of resistance, they'll back up in the industrial sector up there. XSD, the semiconductors, what did you do today? You tell me. So you've watched me for a long time. What do I scream at you when you go down to those or up to the Bollinger Band? That's where the pros are coming out. What about here? Home builders have major problems, but the difference here than the others, you have the embedded reading. So the pros are coming out and they're reselling the market because it's embedded. They're not doing that in the others, in my opinion. Okay, I've got to clarify that. That's my opinion. So this one keeps getting sold until it loses the embedded reading. In the energy sector, you can see where the market's fighting its battle. It's a sideways market. It's no longer, recognized market, it's no longer this. Are you aware that the ruble, the Russian currency, that went up to 130 after all the sanctions hit it and everything, is back down to about where it was, very close, within maybe 5%, 10% pre-Ukraine. Yeah, it's back into the 80s. Unbelievable how fast. I saw today I was watching, I think it was PBS. I watch so many different stations. I catch the news, that's what I like to watch. And I like from all over the world. I want different opinions. They went to Russia and they looked at the pollsters as to Putin's ratings right now today. 81% approval. The Russian people think he's doing the right thing. They're behind the man, and to the person you see it. Now, there's 30% of the people that really are against him in other polls, but he's overwhelming got the people behind him there. It's not our opinion to say they're nuts or whatever. I'm just telling you what the poll is. In the gold market, you can see what the market's doing in the sideways action here. It's now going quiet on you. That's important. From quiet comes a big trend. That's how it occurs. You wind up sideways. If you look here, you wind up sideways. It narrows in the band, and then you get your move. They can be up or down. We wait and see. I happen to think they're going to be up, and the reason is I think the inflation is so embedded right now that as the Fed keeps moving on it, it's because it's staying and it's sticky. And it doesn't help that you have Asia in a complete lockdown in Shanghai. It's even gotten worse. Now, I was reading about the ports and how backed up they are. Each day they're taking now hour breaks, not 1 hour, hours. They have to clean up the mess they have. And what about everything that's refrigerated and staying there? So the supply chains aren't filling. So that keeps price pressure this way, as you know. And I'm talking world pressure. GDX, the miners, caught in the sideways action again. So the trend is up, but I don't think you're going anywhere just yet on it. Copper, back to support. But if you looked at the futures, at 80, I'm so proud of the work I did in that. Look at that market, and I was telling people what I thought. It hit it, and it just gave the correction I wanted. Now, TLT, it's under the Bollinger Band. You never go short under a Bollinger Band. Can I be any clearer? You're oversold. I think the pros came out. That doesn't mean they're bullish. I think they're out of this market. UUP, you're traveling between upper, lower, upper, probably a break again, back and forth in the dollar as the dollar's trying to keep an overall bullish stance to itself, but it's into key resistance as the euro is in the key support, both. One's overbought, the other's oversold. So if you want to learn about what I do, because I put out 2 programs for you. I put out a program as a combo package where you can get my futures update and my ETF. The futures I record at 5:30 in the morning, typically. I'm going to start you off with what went on in Asia, Europe, back to America, the reports that are going on, what we should be looking for today in reports, and what the markets have done overnight, and give you a specific. I want you to buy here. I want you to buy at the market. I want you to sell at the market. I want a price order here. Here's the stop order on that. I'll do it in 40 different futures markets. I think that's a lot. On the weekend, I do it on the weekly charts for you. So there's your longer picture, and I certainly will bring some of the weekly charts in during the week. I flip at 9 o'clock, the switch, and probably around 9:10 in the morning, I start recording. Now, why 9:10? Most of the government reports come out between 7:30 a.m. Central Time and 9. So once they're done, I recheck the charts, put in what we call window envelope numbers. You see these blue line right here? Well, they can be blue, green, and yellow. There's 3 waves of them. You don't see that in what I'm doing here. And I teach you how to work with those. And there's only 5 elements I put on a chart, so there's only 5 studies that I'm working with. I think you'll find it well worth time, effort, and ideas. That's what it's all about, ideas. I don't want to manage anybody's money. I have my own trouble with me. But I'll throw the ideas at you, and maybe it's not such a trouble. How do you find out? Just go to the website, www.iraepstein.com, under the word education. And remember, last chance to see the S&P. Click up here. That's it. You'll see me next probably over the weekend as I do the weekly charts. The S&P report will be gone by then. Have a great trading day tomorrow. See you later.